Hello, YouTubers, friends, compatriots, bootleggers, shills, debt slaves, serfs, peasants, vassals, debt slaves. Oh yeah, I said that. I'm a useful idiot, and today I would like to talk about the giant money vacuuming machine at the top. And that's essentially what's going on with the big players, the insiders, the hedge funds, the freelance financialists, the bankers, the corporate heads, the sharks, all the big players out there, because it is an insider's game. The entire system is rigged. And of course, we've seen this most recently with the LIBOR scandal, where all the banks are involved in manipulating interest rates in order to hide their losses and try and scare up some easy profits. And so now, as it turns out, we have another development where Blackrock and two other companies are now doing analyst surveys and using ostensibly public information in order to make investment moves. But here's where it becomes problematic, and that is the fact that these surveys lead analysts, and these analysts in these financials and these banks are paid for this, taking this survey, and then they provide it to these hedge funds and these other financials, and then these financials use that information to feed into their computers and adjust their algorithms to make their high-frequency trades. So, but the problem here is that front running is illegal, and insider trading is illegal, and as a matter of fact, Goldman Sachs was fined by the SEC $22 million for allowing select clients to have private meetings with these same analysts. But now we have hedge funds who do an electronic survey with all these analysts, and there's one company, Marshall Wace, who uses 290 brokerage houses, 1,900 equity sales representatives, sector specialists, country specialists, and strategists at investment firms from around the world. And Marshall Wace spoke and said that they currently use 3,000 brokerage firm representatives for their analyst pool. So these people are paid, which ostensibly makes them sort of on the payroll of the hedge funds, and these questions lead them to give non-public information. And in fact, BlackRock said that the money management unit was part of Barclays, and they recently bought it. And since then, they've been using these surveys. And they ask questions like, are you more likely to surprise on the upside or the downside with this company? Or do you think the current consensus earnings for a specified period will likely move upwards or downwards? So this leads the analyst. He will provide non-public information. And in fact, BlackRock goes on to say that surveys are careful to ask that analysts supply only those views that they already stated publicly. But in various confidential documents describing the surveys, company officials state that non-public information is what they are after. They say, quote, we expect the earnings surprise direction to be able to capture the information not released to the market. In fact, by 2008, BlackRock stated the question may give the clue on the direction of the analyst's future revisions. They say, quote, we are trying to front run recommendations. So this is an interesting relationship between the banks and the hedge funds. This is once again skirting what is considered legal, what is considered moral, what is considered ethical. And this also is another example of how, if you are a retail or small investor and you think you're going to game this system, you may guess again. I would surmise that most retail investors and personal investors out there who try and be smart in the market end up making gains that add up to probably what they pay in taxes and interest on their debt per year. Probably evens out pretty well. I know I've seen charts of what your investments returns over a decade would be, and you would have been better off just buying gold. But that said, my point being that here's another example of a system that's completely rigged. It's rigged for those at the top who have gamed the system, and they are all insider traders. That is all it is about at the top, insider trading. And there may be different cliques, but I assure you that everyone at the top, including everyone in the banks, everyone at the hedge funds, everyone in the financials, everyone in the government, everybody that's privy to inside information is insider trading. The whole system is rigged, and this is just another part of it. LIBOR is part of it, and we have all these exotic financial instruments that are also part of the fraud, this system of fraud, the system of being rigged. Most of the exotic financial instruments like credit default swaps are just magic. They generate money out of thin air and produce nothing. All imaginary tools created by banks to make money doing nothing. That's what they specialize in now. So they use spoof orders to drive markets up and down and cash in on both up and down movements, so they don't care whether it goes up or whether it goes down. They can short their positions. They cash in either way. They use high-frequency trading. Almost 90% of all the trades done in the United States, New York Stock Exchange, are done with high-frequency trading now. And as a matter of fact, they use the analyst information that they get, this non-public information, and they feed it into these computers to adjust their algorithms for their high-frequency trading. And that's the same thing they do with new software that actually reads the news. So they have software now that reads the news, puts that in the computer, and factors in the algorithms in their high-frequency trading. And then they also do overnight. All their trades and all their moves in the market are done overnight. They do currency swaps. And of course the whole fractional reserve system and the exotic financial instruments. This whole system is all rigged, all gamed. High-frequency trading, gets pennies per transaction, every transaction in the market today. I mean, they literally come in and hook up these machines at the market and siphon off money like giant vacuum cleaners, like giant money-sucking vacuum cleaners at the top. This is what they do. They suck money out of every nook and cranny they can find. They're going after all your home equity. They're going after your pensions. They're going after your 401ks. They're going to find money wherever it's not nailed down. And just to drive home that, this is nothing new. I mean, we've seen plenty of examples of this. How could there not be insider trading when you have Henry Paulson sitting down with a bunch of hedge fund managers and telling them how this bailout thing is going to work back in 2007, 2008? Or who could forget Dick Cheney and his meetings with all the energy companies who cashed in on all the energy volatility and policies of the Bush years, or the fact that we have all these people going back and forth from the banking sector to the government, back to the banking sector. It's just begging for insider trading, and they're giving it to us. And then, of course, you have people like Jamie Dimon serving on the Federal Reserve Board. While the Federal Reserve Board decides which banks to bail out and which ones not, and who to cut sweetheart deals and who not. So this whole system is corrupt. This whole system is rigged. Small-time investors are playing a fool's game, and the people at the top have a giant money vacuuming machine at the top. I'm a useful idiot. Don't you be one too.